the profit margin that the DoD determined TransDigm made on this part on purchase in 2018 was over 4,000%.
Hi, everybody. I'm Diane Brady. I'm here with my colleague, Jeremy Bogaisky, and we are talking about Billionaire who allegedly price gouged the Pentagon. Jeremy, tell us more about this story.
There's a company called TransDigm, which I think probably most people haven't heard of. They're a maker of parts that go into airplanes and helicopters, and they have operated a playbook of trying to be like a private equity company operating in the public market. It's what they do is they buy small makers of parts that are exclusive to that company. They're the only maker of that type of part. Oftentimes these are family-owned companies or owned by a private equity firm.
So they establish a monopoly, basically.
Yeah, that's the idea. And what they do when they buy these companies is they often work to improve productivity per head. That's a metric they look at, which often means that they lay off workers. And more importantly, for why we're looking at them is they raise prices, oftentimes by very, very high amounts. And the Department of Defense has done a number of audits and reviews of the company, and they have found that the company has been ringing up profit margins of astronomical amounts.
Like what kind of amounts are we talking about? Can you give us an example?
Sure. There's a part called a quick disconnect coupling half, and the profit margin that the DoD determined TransDigm made on this part on purchase in 2018 was over 4,000%. That's kind of par for the course for many of the things that they sell to DoD.
And what do you take away from this exercise? I mean, in terms of as a reporter, maybe what surprised you, or even what you've learned from this that will stick with you?
That there are a lot of things that Congress could do to make it so that these companies can't charge such high prices, and to give the Pentagon more power to get a better deal for taxpayers. I should also say, and this is an important point, the investigations that have come out of the Pentagon into TransDigm's pricing practices have shed a lot of light on how aggressive they are in raising prices, but they are not primarily a defense contractor. 43% of their business is in defense, but the bulk of their business is in commercial aerospace. They sell parts for airplanes that are flown by all of us airlines, and they're also very aggressive in their pricing with airlines and with Boeing and Airbus and small plane makers. And so that's something where it more quietly is affecting all of us as travelers. sources I've spoken to have told me that the airlines are often very unhappy about having to pay up the prices that TransDigm is charging, but they don't have a choice. One of my sources, who's a former employee at one of their units, said, don't like it, your plane doesn't fly.
What's shocking about this is I think of government procurement as being a very transparent process. They've known about this, I'm sure, for a while. Is there nothing they can do about it? Only one person has the parts.
TransDigm has become, to a certain degree, kind of a whipping boy for Congress and the Pentagon over this issue. It's not the only company doing this. There have been other reviews by the Department of Defense's Inspector General that has found overcharging by a high number of defense contractors, including big names like Boeing and Lockheed Martin. The problem is it's entirely legal. One defense that TransDigm has offered, and it's entirely true, is that they have not broken any laws in doing this. The acquisitions officers at the Department of Defense are handcuffed in a way in vetting the contract bids that they're receiving by moves that Congress has made to water down what were once fairly robust protections that gave them the power to scrutinize costs at the defense contractors. In the 90s, Congress and the Clinton administration introduced a series of reforms that essentially watered down something called the Truth in Negotiations Act, and it capped at a certain amount that's been raised over time the amount in terms of contract value under which defense contractors didn't need to provide data showing the Defense Department what their costs were. Up until, for much of the past decade, that level was $750,000. And then in 2018, Congress raised that to $2 million. So any contract under $2 million, defense contractors don't have to
they have
provide
free
cost
reign.
data. Yeah.
It's interesting. What's bad for taxpayers arguably can be very good for investors. You mentioned this is a public company. How is TransDigm done in the public markets?
It's done fantastically. It's arguably been not a good thing for taxpayers, but for investors, it's paid off handsomely. Since 2006, when the company went public, its total return, which incorporates increase in stock price plus dividends, has been number one among U.S.-listed aerospace companies. It's averaged a total return of 29% a year over that time. And that's way above Boeing. Next closest company, also a parts maker, HAECO, 21% total return over that time.
So how did it get on your radar? I mean, what put it on your radar right now, Jeremy?
There's been a renewal of scrutiny of the company over its refusal to turn over cost information. Procurement officers have been trying to get these companies to turn over cost information, and there was a report earlier this year that offered more numbers on how often TransDigm refuses turn over that cost information. Boeing as well was a big subject of that report.
Well, one of the characters, if that's the right way to put it, in the article, the main character, I'd argue, is the co-founder. Is it Nicholas Howley? Is that how you say his name? Tell us a little bit more about him.
Yeah, he comes from something of a blue-collar entrepreneurial background. His grandfather founded or co-founded a company called Lansdowne Steel and Iron in the suburbs of Philadelphia that was a machine shop, made machinery, and became a supplier of munitions to the U.S. military in World War II. Howley's father went on to run the business, and Howley, Nick Howley, was worked there during high school and college, and then he went on to get an MBA at Harvard Business School, and then went to work for a company called IMO Industries, which was an industrial conglomerate spun out of Transamerica. And there he was a finance executive, and then he got put in charge of preparing a handful of aerospace businesses for sale. They were going through a slump, and the company needed money, and they decided to spin them out. And he would not talk to me for this story, but I found a podcast that he recorded with a business partner in which he described the origins of the business. And basically he decided, and along with his boss, Doug Peacock, that they wanted to buy these businesses. And
it seems to be a winning model. I mean, what's interesting, I'm curious as to maybe not what shocked you, but coming into this story, what do you see as some of the potential remedies? I mean, shaming is a powerful one. I remember with the EpiPen, that was what brought the price down when that went up, several 100%. Are there any moves afoot to actually address this on a more comprehensive basis?
There have been some developments that should help. Congress last year included a measure in the National Defense Authorization Act that rule writing is going on with right now, that would give procurement officers more ability to compel companies to provide cost information. The Defense Logistics Agency, which handles much of the Pentagon's buying, also started an initiative to reverse engineer parts made by TransDigm, and they've had pretty slow progress on that.
Like a generic drug almost, basically,
yes.
Right? So just how much money is this company and its co-founder making?
Yeah, and the company has grown revenue over tenfold since it went public in 2006 to $5.6 billion, and it has awarded its executives and board members handsomely. It hands out very high incentive compensation to encourage executives to meet very high targets for growth, which former employees have told me is one of the reasons why it works so hard to jack up pricing. Nicholas Howley, the co-founder, we have determined is a billionaire based on the stock compensation, other compensation he's been awarded over the years. And he's not the only executive who's gotten rich off of this company. Quite a few people have gotten wealthy off of executive compensation. In fact, it's been a matter of controversy. Last year, the company settled a suit brought by investors that alleged that the company was overpaying management and board members by staggering amounts. The company has an MO of also returning money to stockholders, as evidenced by that 29% a year total return. A lot of that has come in as rich dividend payments, but those dividend payments have also been
at a very high cost, certainly at a very high cost to others. It puts the defense budget in a new light, for me at least, and I hope everybody has a chance to read the story. So thanks for joining us, Jeremy.
All right. Thanks very much for giving me the chance to talk to you about it.